Welcome, it's Denome, and welcome to this crypto update. Now, today's update is interesting one because Bitcoin is now having that pullback, which I was talking about in the previous update. That is likely that Bitcoin will be heading for an attempt at new lows here, and we're having that move right now. Now, in the medium term, I'm still actually bullish. We had the RSI trendline breakout to the upside here, but in the short term, I actually expect a little bit more to the downside before we have that rally back to the upside. Right now, I am not expecting a breakout of the previous all-time high. What I'm expecting is a move to about 99 to 101K. If Bitcoin goes absolutely wild, up to 110K is possible, but I don't really see much above that in the short term because the whale sell pressure is currently on. So I actually believe that there will be a lot of whale selling as price attempts to go to the upside, and there are no new investors in the market from previous rounds. So I think this will be a failed rally to the upside, and then we will head for that real bear market and for the first half of 2026. Maybe by second half of 2026 things start to look better again, but this is currently essentially my base case of how things will be. We go one more rally to the upside, it will fail to break all-time high, and then we will head for lower prices. But in the short term, we have that similarity which I showed in the previous update, that we had the RSI breakout similarly like we had in March of 2025 happening at the moment. But after that breakout in the RSI, we actually had a new lower low here on the price chart that gave us a bullish divergence, and from there we had a rally to that all-time high from October 2025. So something similar, but this time I expect a failed rally and then further downside. So that's essentially the technical analysis, but I do have some updates of why we had this this dump to the downside right on the first second of December 1st, and that was actually something to do with time algorithms. So Nick Algo here had a decent post, and I believe his analysis is right. So he says that Bitcoin didn't dump because of bad news; it dumped because the clock flipped. The UTC closed a new day, new week, new month, all at the same time, and an obscene amount of algos fired almost simultaneously. It's not traders making decisions, it's portfolios rebalancing in real time, inventory adjusted, hedges reset, risk flushed. The candles look emotional, but the behavior is mechanical. So he says that this actually happens quite often, but it's just because 1st of December happened to be a Monday. So it's just a lot of algorithms essentially hitting at the same exact moment in time. Maybe in the future, I will actually remember this and be able to hedge against something like this. But maybe you guys can take mental note of this event here. So that's essentially what happened with the 1st of December, but we have some other interesting news as well. So Amundi, which is a $2.2 trillion asset manager, has actually in stealth launched a fund on Ethereum. So November 4th, they had launched a new fund. I will talk about that soon. It's a $5 billion euro cash fund. And currently there is no public address for that fund, but it supposedly exists. There's a lot of posts about it, like here on CoinDesk, European asset manager Amundi debuts tokenized share class on Ethereum, tokenized share class of its Eurocash fund, partnership with Case, one of the largest asset managers in Europe, Eurocash fund. You can purchase shares either with cash or you can hold a tokenized version which has been launched on Ethereum. But like I said, we don't know the 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 address for that yet. And KK's said that investors will be able to buy the fund through either stablecoins or in the future with digital central bank digital currency, the euro, digital euro project, whatever. So that will be coming down the line, I guess. So I was looking at this fund here, and I believe it is this one, which is, I guess I can link this in the description. When you take a look at the price chart, it looks a little bit interesting. So I was looking at why does it have these sudden dumps if it's a cash fund. The reason for this apparently is that when it gives dividends to its shareholders, then they do a rebalancing here, and that's why the price of this asset actually drops, because they give out the dividend, and then it starts to climb as it accrues interest from its holdings, and then it gives out a dividend and the price drops a little bit. So all in all, what I was looking at how this fund behaves is essentially a bet on the euro, plus you get around 2 to 3% annual return on your assets. And when we take a look at the summary here, you can see that this fund here, the fund size is 4.83 billion British pounds, so about 5 billion euro or $5 billion. So that's essentially the size of this fund. And you can even see, if you go down here, with the biggest holdings are France's debt, and then Italy's debt, and other Italy's debt. So it essentially invests in government bonds across Europe. That's, I guess, is the idea of the fund. But they said, which it was interesting, that tokenization is one of the trends that they want to hop on, and they believe that does this replace traditional fund structure? Essentially, no. But tokenization is a transformation to accelerate in the coming years around the world. So they just want to be ahead of the curve. So when they come to Ethereum, that obviously makes a bullish case for Ethereum. So even though it's all kinds of ESG nonsense, climate change action, and all these kinds are embedded, all this dystopian stuff are embedded in this fund, for the price potential of Ethereum, I believe this is still a good thing. So there's that. It doesn't mean anything serious happens immediately, but overall, the institutional adoption is still happening underneath all of the FUD and craziness that we see from week to week. Then, like I showed you guys in the previous update, the Fusaka upgrade is coming, and this will essentially make the layer 2s on top of Ethereum burn Ethereum in the future. So hopefully, if some of the analysts are correct, then Ethereum will start to become more deflationary than it has been so far, and that means more essentially buy pressure for Ethereum, or at least less sell pressure for Ethereum down the line. So that's also a good thing, and that will come out in December 3rd. Could be a sell the news event, but still fundamentally pretty nice upgrade. Then hopping over to Polymarket and talking about the Venezuela-US situation. This attack is still unfortunately imminent. Donald Trump has made a post saying that they have closed off Venezuelan airspace, that nobody is allowed to go in there. But some airlines actually just said, okay, this is a tweet. Why would we follow a tweet? So I guess some announcements will go through the official lines, and if we start seeing planes not landing in Venezuela, then we know that the attack is about to come. But right now, the chances for military engagement by December 31st are sitting at 44%. And if you want to invest in volatility, this could be an interesting choice for you guys. I'm currently not betting on this market, even though I believe they will attack, because if you are wrong, you lose everything. So there's no stop losses or anything, and the announcement may come any moment in time. So it's just not a market I really enjoy. So anyway, by March 31st, currently the odds are sitting at 62%, which is down a little bit from last week when it peaked at like 70% here. 75% on November 24th. But overall, it's still imminent. We don't know if it's gonna happen or not. Most likely, it will, like I said. And if and when it happens, I believe there's going to be a sharp drop in asset prices. But then if they stop the military action within a week or two, then asset prices will most likely recover. But keep this in mind that if you are invested in altcoins, this is something that is looming behind us and makes essentially people not want to really invest in altcoins. So again, I'm not expecting any crazy price action on altcoins. And in fact, with this most recent dump, altcoins took a big L as well. Now, that's essentially the big news for you guys in this update. Now let's head over to fundamentals. And here we have some interesting updates. First off, let me just refresh this page here. When we take a look at the supply of Bitcoin on exchange reserves, from the lows of 22nd of November, we have started to see supply leaving Bitcoin exchanges once again. And this is a signal typically of accumulation. So when we see accumulation here and price drops, that usually means that people are ready to actually buy or uh, the energy is getting stored in another pump in the medium term. So overall, this is fundamentally again a good signal from Bitcoin that Bitcoin is leaving exchange reserves. Then on stablecoin market cap, we have seen a stagnation here, but like I told you guys in the last couple of videos, there are new dollar-backed stablecoins in existence, like the PayPal USD and Klarna USD and some other USDs as well. So I'm not looking at them in this chart here. If you were to include those stable coins, then this would actually still be going to the upside. So overall, even though my chart is looking flat, the stablecoin adoption is still happening on the background. Actually, I am tracking PayPal USD. Let's see, what does it say? PayPal USD 3.8 billion. Okay, so I'm tracking it, so I'm actually wrong. So it has been flat over the weekend, but going to the weekend, we had uh, an increase here. So that is still pretty fine, even we had a pretty flat month there. Then what is really interesting here is when we look at old whale wallets and we look at what they have been doing with their holdings. Are they moving their old Bitcoin or not? We had these major spikes here at the bottoms. And a lot of the reason why we had these spikes here was because Coinbase and MicroStrategy are changing their custody uh, systems. So they were moving a lot of their old coins. So that caused this massive spike here, which has essentially made this graph a little bit harder to read. But what is really important is not this spike here, but what happened afterwards. So on November 26th, we saw 58,000 Bitcoin from wallets that have held Bitcoin more than 90 days being moved here. And after that, November 27th, November 28th, 29th, 30th, there's practically no old Bitcoin being moved anymore. So even though Bitcoin was essentially flat around 90K here, we did not see more sell pressure from whales or really institutions either. So this is signaling to me that we might actually be close to a local bottom as well. And now that we have this anomaly in the price action here, I think it's a pretty decent time to actually start bidding for the upside from this chart here. Now they could turn around today on Monday and they are scared of this bad price action. Actually, Nick Algo, the guy who talked about this timed algorithm stuff here, he called this that uh, people should learn what is something called momentum ignition. So a momentum ignition is essentially whales or whale manipulation where they make a big market sell order to nudge the price in one direction, and then when everybody else has to adjust to that price move, it might create some fear in the markets. The price might continue to go further to the downside as people panic and sell, and then those whales that caused this momentum ignition buy back, then we will have the rally to the upside. So he believes that this move could have been something like that. So we could see a little bit further move to the downside, and then a price rally back upwards. Another interesting point here, looking at the Bitcoin distribution, is, which I've been covering here for the last couple of weeks, is that whales started to buy back Bitcoin as it was dumping from 110k to that roughly 80k bottom there. And the whales here actually sold off some of the Bitcoin, and it went into the hands of institutions. Maybe this was just the custodian move situation. I'm not exactly sure what caused this sudden drop here, but even after that, you can see that the mega whales have continued to sell at this moment in time. So I guess many whales are still looking to essentially, even though they might not be able to sell at the perfect price, I believe there will be a lot of pullbacks when we try to go to the upside, as whales come again and try to sell any pumps to the upside. So that's fundamentally where we are, is that Bitcoin is still leaving exchanges. So fundamentally things look good, and we are not seeing at the moment, at the price of 90k, we're not really seeing whale activity rise, which again tells me that Bitcoin price would actually like to head a little bit higher before we have another dump. So that's again a further point, further signal that we want to go higher. Now for liquidation map and liquidation heat map, there is actually something interesting here on the chart, which is that there's some people trying to long Bitcoin at the moment, and you can see the bright colors in this chart. There's a hotspot here at 94k. I believe we will go there at least, and as you can see, the hot area starts to diminish after $99,000. So we could have at least a move to 95k here in the short term, but a move to 99k, that would be a decent spot for a reversal once again. But here below us again to that about 83k, we do have quite a bit of long liquidation levels. So if this momentum ignition theory is correct, then we would go and tag those liquidation levels, and from there we could have a rally to about 94, 95k. And again, the same thing is shown here when we hop over from liquidation heat map to liquidation map, and we go to the 1 week view. You can see just massive amount of liquidations, essentially going to about 94k, let's say that. And from there, I think we will go and liquidate these short positions here at 92, 93k, going to about 94k, like I showed you in the previous chart. For aggregated spot order books, here was an interesting update after the algorithm selling actually was ignited. We haven't seen, or what we saw here is that the limit sell orders have vanished from order books. So the level of limit sell orders is historically at a very low point on the spot markets. You can see from the line here that just a couple of peaks here have been higher in the immediate vicinity. So right now there aren't much limit sell orders on the order books, but there's not too crazy amounts of limit buy orders either. So the order book is quite thin at the moment. The buyers haven't really stepped in. There's the same passive amount of buys as there had been before, which again kind of signals to me that this move still wants to go a little bit lower before we have that reversal. But overall, the spot order book delta has now reached a number of positive $50 million. So that is nice, but just because I'm not seeing new limit buy orders entering into the order books here, that tells me that this move might actually go a little bit lower, as some people might panic sell here. Then one more interesting point, this is the last one, then we go back to the chart. So going again with CoinAnk data here, what we are looking at is the Coinbase Premium, which is essentially US-based whales and US-based institutions. When they were selling here, that caused the price to drop all the way to about $80,000. And from there, you can see that the Coinbase premium has actually flipped positive, which is quite nice. Now, at the moment, it is neutral. So institutions essentially have stopped selling already. And as we saw before, whales have stopped selling as well. So right now, the sellers have pretty much been exhausted from my understanding. So it looks very likely that we will have a pump to the upside either from this price level or we go a little bit lower like I showed you guys, and from there we will have a rally back to the upside. The funding rates have flipped quite positive here, which is not exactly what I like to see, but I'm not too surprised because all of the sell pressure essentially came from the spot markets. You can even see the cumulative volume delta on the spot markets. It had a nice crash right at the beginning of the day here. Maybe you cannot actually see it, but trying to zoom in. So just market sell orders were triggered here, and that caused the sudden price spike to the downside. So personally, this is not the time to panic. That's my opinion. But we could have a little bit lower move here if things go absolutely crazy. We could see something like we try to go and tag a new low like 78k or so, and then we reverse the direction. But honestly, just looking at the 1 hour chart here on the Bitcoin, you can see that we are massively extended here on the RSI already. So maybe a relief rally, then we go for a new low, 83, 82k, something like that, and then we head for new high, and hopefully we break this trend line here, then we can go to 99k, something like that, and then go for that bear market. So that's essentially the update for you guys today. Let me know if I missed something interesting or I should talk about in the next update video. And remember, guys, if you want to get access to tokenized stocks, which by the way have been going pretty well for me. So looking at the Circle, this has pumped really hard from that $66 price level when I shared it to about $81. Right now, it had a pullback with the Bitcoin dump here, but overall, Circle is looking good, and also the PayPal has been doing absolutely amazing as well. So I'm in a very good price territory. Well, again, the 1 hour chart is actually massively on the oversold area at the moment. Overbought area at the moment. So maybe it will have a pullback. But if you want to get access to these tokenized stocks, you can sign up on BitGet and consider joining on the 3commas.io bot trading platform as well, and some other affiliate links I have in the description to support my work. That's it. See you guys on the next one, and bye bye.